Yeah, good evening, all the traders out there. Uh, a strong gap up opening. We'll talk about markets, but before that, let's read out the disclaimer. Uh, the content of what we discussed today is for educational and informational purpose only, and it does not constitute financial advice. So, let's go and plan it out. How was your day today, everybody? So it was a very big day in context of price movement, and you don't have such big days on a regular basis. So let me go to the Stocko Incred Money Trading View platform. So what we saw is in the market is the highs and the lows, which we would now call it as in medium term context, both were tested. So in the volatility was crazy. So that's Nifty. In 2 days, from low to high, if I see, the movement is 7.5%, which is an extreme movement. Okay. So within 3 days, we tested on the budget day the medium term low, and today we tested around the all time high. Okay. So which tells us that medium term, the range is defined, fine. But in between, the volatility or the swings which you are seeing on basis of intra week are too high. Okay, so that's how market is, that's what the conditions are, and we have to expect it's crazy overnight volatility. So the range is holding, and for extreme short term traders it does become too difficult because you don't have any identified or established support and resistance as are around the current price. So we were watching the 200 DMA Nifty gapped up today. So we'll follow that. Now the trend on the daily, given today's the up move, is we can call it up because such a big move or channel break and all. This channel break does make it up. So market is, I would call it up, but the way at a budget day low at a medium term, it was oversold. Today it hit the all-time high. Let's label it up, but overbought. So let's not chase price. Okay. And the chart and the candle pattern today, if we see, we call this as a bearish Marabuzu candle, which is it open and high was same and it declined throughout the day. So this does suggest that around the all-time high, there was a supply waiting for the market. It pushed down. So, and if it's a bearish candle at or around the high, that means market are likely to trade in a volatile in the medium-term trading range. Right. So, candle pattern for Nifty is bearish for today, but if you see the overall context, this interpretation is more of academic and very little reference for day-to-day trading, because a 4% candle, whether bullish or bearish, it has consumed lots of price movements. You'll have to wait for next few days to see where the trading support and resistance are in the market. So resistance, now we can take it at or around this high. In between, if I want to see is there any established resistance, I go to my 60 minutes. So I would still call it's way up there. So there's a massive expansion in context of the price action, both on the downside on the budget day and upside today, and which was an event day. There's no way you can make out such big moves. Overnight, the tariff news came and market gapped up. So lots of things you accept it, and there's no way to analyze or know it beforehand whether it's likely to happen or not. So that's the resistance, which is 26,322. Before that, let's put a intraday resistance, which is for trading. So I would put it around this high. Let's see if it's breaking or not, which is 25,850. I would put it. 25,850. And above that, you have the resistance from the all-time high, right? So you have to trade cautiously in this market. Okay, it's not it's too high at too extreme a volatility. So let me remove this. It's just not going away. Yes, right. Support again, it's way down, but as a trader, I don't have any support all the way from here to your gap. To see where the support in the market is for the extreme short term, we'll have to wait out for a day or two. Or else, support levels will be now a reference point which we can take it around this low 25,600 or this gap. So I would put it 25,100. It's way down. So you can pick all the three. This was gap up, and again I would bring in the 200 DMA which we have been talking about. Remember, your 200 DMA in Nifty and 15 Bank Nifty will just not go away, at least for a decent period of time. As market whipsaws around those levels, we have to be aware of this level. The support, I would put it as this breakout 25,400 and 25,200. So if you see, it's 25,454. Let me write it down. 25,454. Yeah, it's way above and below the current price, both the support and resistance. That's the what volatility has done. It has expanded the range in 3 days like anything. And 200 DM is 25,235. 25,235. So this, if you're an extreme short-term trader, a day trader looking in and out, it is far prices where are your support and resistance are too far away from your comfort. And the technical study right now is markets. Now I'll remove the 200 DMA, go back to the overbought oversold, which we measure with Bollinger Bands. At the bottom, on the budget day sharp decline, we were oversold. Today at the gap up opening, market is overbought. Right? Now what comes into picture is the middle ball. If the downside of the band and the upside of the band both were tested with gap up above the middle band, let's now put the support at the middle band, which is 25,497. And that's also 20-day moving average. So keep a watch on 20 DMA and 200 DMA. These two averages are now going to act as your decision making points. Okay. Then we go to the open interest buildup. So Nifty expiry has happened today. I go to Stocko Incred Money Insta Options platform, and I select Nifty. Today the expiry has happened. I go to the February 10th expiry. I go to OI statistics. So there, the resistance is 25,800, which is far time left is for next 1 week. So I would rather give more prominence to 26. So 25,8 to 26, but we have to note it down, which is 25,800 to 2600. And remember, this OI study, it fluctuates or changes on a daily basis. Accordingly, you have to make those adjustment in your plan. On the put side, in the next week expiry, it is a put side 25.7 and 25.5. So let's put it at 25.5 only, given the OI. On the put side, it's 25.5. So I would write it down. Put side is a reference point for support, which is 25,500. Cumulative PCR, let's go and check out what's happened to the PCR ratio for Nifty for the next week expiry. It's 0.85. Yeah, if you want all the interpretation of PCR, do attend the regular webinars which we are having on a daily, on a regular basis. So you can subscribe to the Stocko YouTube channel, in which you'll get the notification as and when the webinar happens. Now, straddle price. How many have got into the habit of checking the straddle price? So I'll go to the option data. This is Nifty, 27, 25, 750. So the straddle price is again is close to 200 to 180, 380. So if you see the straddle price range, 380 is the ATM straddle price range. So the volatility is going to the order of the day. Don't expect it to subside or vanish just suddenly. Fine. Commentary is one word: volatility is here to stay. Right. So now let's analyze the Bank Nifty. So for Bank Nifty, if anybody can tell me which is the averages which we are following, it was 50. And Bank Nifty also, if it gapped up, it was too overbought on the Bollinger Band. So no doubt market opened strongly, but it gave a big stamp of getting overbought. So Bank Nifty, it's the 50. If anybody can remember Bank Nifty, which we have been following, so it's a 50-day average. So Bank Nifty, the average is somewhere here. So I'll take that as the nearest support. So which is around 59,376. Fine. So I will take support as 59,376. Again, it's overbought. So I'll route. Today at open, it became overbought. Candle pattern again is bearish. So bearish in the sense the way it opened and closed. And at overbought, a bearish candle does send market looks stretched at the opening. And resistance for Bank Nifty, if I see, it crossed the all-time high. So once the all-time high is crossed, we don't have any reference point but to take the recent high. So it's 61,700, which is way, way up. So you'll not find support and resistance nearby. For that, as a short-term trader, you'll have to work very hard with respect to open interest and the moving averages which are running around the current price. Fine. So 6. So I'll just put today's high, which is again an all-time high in between. As of today, we don't have any defined. So technical study over here will be the 20 DMA will be same, but for Bank Nifty, it's whipsawing the 50, showing great volatility around there. So we will follow it. And from the open interest build-up side of it, again I go to my Stocko Incred Money platform and change it to Bank Nifty. So, and I go to trending OI statistics. Yeah, so if you see in Bank Nifty, majority of the OI build-up, if I can see, is at or around the ATM only. See, below that, the bars are very less. It's their open interest build-up, but it's more around the 60,000 strike price. So the put is 19 lakhs, the call is 70 lakhs. So which itself says around the current price, a 500 to 1000 points volatility expansion either on the upside or on the downside is going to be the norm of the day, excepted for few days. Okay. So it's the entire OI build up in Bank Nifty is at ATM. So open interest build up, I would put it at ATM. Now for the PCR, the put call ratio, again I go back to my Stocko Incred Money platform, which is Insta options, it's 1. So now it's saying 1 means if I see in the trending OI cumulative, 1 second, let me cumulative, let me show you. Yeah. So now bulls and bears are neck to neck. 1.06 crore is the OI in call, 1.05 crore is the OI input. So PCR is at 1. Quite interesting. And all the action or the trading concentrated around the ATM. Right. So PCR, I would put it 1. Let me go and still take the exact. Yeah, it's 1. So the PCR over here is 1. Equal calls, equal puts. Straddle price is important to check. See, as a trader, given the volatility, always check the straddle price. If I go to the option chain of Bank Nifty, right, straddle price means the one which is highlighted ATM call and put. So for ATM call is the 841, for ATM put is 650. If anybody can give me the addition, which will 848, 1400. approximately, I think 1500. Am I right? Yeah. Not exact maths, but yes, it is 1500. So that itself, yeah, 1500, I got an answer. So now it tells me conclusion is volatility is here to stay. I think it's a decent conclusion out there. So 380 points straddle price. If you remember, we were doing that budget day webinar. Just day ahead of a event budget, the straddle price in Nifty was approximately 390 points. So we are back to that volatility. And in Bank Nifty, it's 1500 points. Okay. So volatility is here to stay. Before we go into gold, I would just like to tell you that in a momentum market, right, you can go to this Stocko. You can subscribe over here, Stocko Incred Money, our YouTube channel. I have done certain videos on how to trade the volatility as a day trader using a system of what we call a multiple moving average trading system. So that you will find in this webinar, which is how to day trade using TradingView. It was a live webinar. If somebody really interested to trade those intraday swings or spikes as we call it, or a day trader's momentum, you will find the multiple moving average trading system out there. So make sure you go to this webinar, which is how to day trade using TradingView. Right? It's just for your information. I put it. So now let's go to gold. So for gold, I'll go to MCX, gold futures. Gold futures, if you see, it is as we analyzed, it is taking support at 50 DMA, but volatility is yet to say everywhere. You are not going to find that half a percent, 1% move in any asset class out there. Everything is swinging wildly. The wild swing is nothing but technically we call it a volatility. It has surface, so we'll have to live with it. Right? So gold, the 50 DMA is the support level as of now. Gold is trying to climb up, but having said that, when serious support levels do get breached, they act as a resistance. So for me, on the MCX gold side, the resistance will be around 158, 1,58,222. Right? And support levels, you have a 50, but if you're a short-term trader in the volatility, 50 we use it as a medium-term judgment of trend. So I would always prefer to have the Bollinger Bands with you. If you see, it's currently consolidating around the middle band, which says that intra-week volatility will be there, not only intra-day volatility, right? And this is what technically we call a bulge, when Bollinger Band are wide apart. Here, Bollinger Band were close by, so volatility was not that high. The moment you see a bulge, be prepared for very high volatility out there. So that's what gold is. Support at 50 DMA, resistance around 157, 190. Let me write it down. So gold, the daily candle is bullish, chart pattern is consolidation, resistance. Can anybody help me out? What's the figure I said you? Let me see how attentive you are. Gold, 1 lakh. So I would put it at 157, 763. So 1 lakh 57,800. 1 lakh 57,800. And for support, look at 20 DMA. If that breaks, then again the 50 DMA will come into picture, right? That's how gold is. Okay. Yeah, since I'm writing everything cap, let me follow those sequence. But is preparing a trade plan this way helping you? Just either give a yes or a no. So technical study again will be 10, 20 and 50. Yeah. Right. So we are not analyzing the OI in gold, right? And gold also, the volatility will be there. So all asset class volatility has surfaced. As a trader, you'll have to live with it. I'm repeating, as a trader, you will have to live with it. So that was how we prepare a plan. So once you prepare a plan, it's so clearly coming out that yes, the volatility is there. I have to trade the volatility, be with it, or stay aside of it. Right? You're not going to find a normal 50 points, 100 points move in Nifty when you're having a straddle price of 380, or a 200 points move in Bank Nifty when you have a straddle price of 1500. You will see those wide swings happening. So such volatility expansion won't happen. It takes some time to cool off. And before we end, let me read out the disclaimer. Investment in securities market are subject to market risk. Fine, read the documents carefully. And again, another thing I want to say, we have got good response to the webinars we are having on YouTube Live. So we have decided now to start it in the morning also before market opens. So we'll start it from 8:45 to 9, or may stretch it to 9:15. So we'll start before market opens, and we'll plan it out the day as a day trader, or some opportunities out there in terms of technical study and for educational purpose. Any setups out there, we'll discuss in the morning webinar. So morning webinar, how many of you want, then we can plan it accordingly, or else we'll just continue with the weekly webinar. Let's see how many says they want the webinars. Yeah. Yes, no. Okay, I am always fine. So make sure you have subscribed to the Stocko YouTube channel. And whenever we start the webinars live in the morning, you'll get a notification out there, so you can join it. Fine. I think we are in a plan to start it as soon as possible. It could be this week, or maximum by next week. So happy trading. Volatility is there. Be prepared for it. And that's how the markets are shaping up, which means 8%, 6, 7% plus move in 3 days by default is volatility and not the trend. Okay. Thanks. Have a nice day, everybody.